Welcome back to Shackles on Wells Fargo. The Federal Reserve has slapped Wells Fargo with an unprecedented punishment for years of misconduct, including the creation of millions of fake user accounts. The punishments imposed on Janet Yellen's last day as chairman of the Fed will restrict growth at Wells to under $2 trillion in assets, pressure the removal of 4 Wells Fargo board members, and require the submission of detailed plans to remedy Wells Fargo's wrongdoings. Joining me right now in an exclusive interview is Wells Fargo and Company CEO and President Tim Sloan. Tim, thanks very much for joining us this morning. We appreciate your time.
Oh, you're welcome, Maria. It's great to see you and be with your viewers.
Yeah, your reaction to what the Fed instituted on Friday.
Sure, Maria, there's no doubt it was a disappointment, but I think the important point is that we've been making fundamental changes at Wells Fargo since I became CEO about 16 months ago. We've addressed leadership concerns. We've made fundamental changes in terms of how we're organized. We've invested billions of dollars in improving our risk management practices. We've addressed any concerns that customers have, including remediating customers who are impacted by the retail sales practices issue. And so the issues that the Fed called out in the order are items that we're in the midst of correcting anyway, and we have been for months. And in fact, in the order itself, the Fed highlighted the changes that the board has made, as well as the changes that management has made to make Wells Fargo a better company and address these issues.
Yeah, and you've announced a lot of the changes that you have been putting in place over the last year. But given the fact that your asset size is dependent on deposit growth, and if you're growing deposits by, 4.6% a year or so, this consent order is going to force you to shrink your business, right? I mean, it's going to force you to shrink some businesses in order to keep your assets flat. So which areas are you going to shrink?
Well, first and foremost, Maria, Wells Fargo is absolutely open for business. We can operate our company, serve our customers with the $2 trillion balance sheet that you referred to. There are some areas where we've grown our balance sheet because there have been opportunities created from some of our competitors. We will be reducing some non-operational deposits. We'll reduce some short-term investments. We'll reduce some deposits that we get from other banks. But overall, the order allows us to operate the company in a make-sense way so that we can continue to grow loans. Maria, as you know, we're the largest lender in this country, and being able to provide credit to our customers is not only critical for them, but is critical for economic growth. And then we'll continue to be able to take deposits from most of our customers.
Well, this morning we're seeing a lot of your analysts react on Wall Street. Everybody's downgrading the stock, several downgrades on Wells Fargo shares, and obviously the stock is down 2% right now, Tim. I mean, isn't it true, as one analyst writes, the operating leverage story is now delayed? The fact that now you are getting a restriction to growth just at the same time that we're actually seeing growth expand in the U.S. You're not going to be able to take advantage of that broader growth because you've got a restriction on growth.
No, Maria, I would push back on that. Again, Wells Fargo is open for business. We will be able to grow loans. We will be able to grow deposits and serve our customers. It restricts our balance sheet growth, but it doesn't restrict our ability to serve almost all of our customers. That's what I communicated to our team on Friday, and I'll re-communicate that to them again today. I want them out there serving our customers and being part of the continued economic growth of this country.
Sure, of course, but I'm just saying that it's unlikely that you can take full advantage of the economic growth story that is at your fingertips here, even though you have terrific cash flow, significant excess capital position. You've got a risk here because you've got to limit growth. Do you think this punishment was too severe?
You know, Maria, let me get back to your last question, and then I'll answer that one. We were very clear on our call with our analysts and investors on Friday that we think that the net income after tax impact of the restriction of balance sheet growth this year will be $300 to $400 million. We expect to have this cap lifted because, again, all the activities that the Fed would like us to improve on are the same ones that we'd like to improve on, and we believe that it's likely that the asset cap could get lifted by the end of the year. So we think that the earnings impact is primarily focused now. Again, to get back to your point about taking part in economic growth, since the beginning of the year, we've seen an increase in our loan pipelines, and our expectation is that we'll be able to take a part in that economic growth. Again, there's no restriction on growing loans.
Right.
There's no restriction on providing credit. There's no restriction on growing retail deposits, and so we'll continue to do that.
So will you have to shrink the trading and financial the financial franchise to make room for more loans?
Maria, we have excess liquidity at the company. What we talked about on Friday, and we provided a fair amount of detail in the deck that we provided to investors and analysts, is that the three areas that we'll be focused on making sure that we manage appropriately to stay below the cap are: one, non-operational deposits; two, deposits that we receive from some financial institutions; and three, our short-term investments. That will allow us ample room to be able to grow loans, serve customers, and grow deposits.
Now, you said that this is obviously going to start being in the rearview mirror at some point. You said perhaps at the end of the year. What gives you that indication that this is going to be no longer a problem by year end?
Well, again, it's my hope and my expectation that that'll be the case. And I say that for two reasons, Maria. First, in the order, it's very specific. There's a very specific time frame by which we're going to provide two different plans to the Fed. The Fed will review those plans. We'll bring a third party in to make sure that all the changes that we have been making and will make have been implemented and adopted within the company. That next report by the third party is due by the end of September, and my expectation is that we'll meet and exceed the expectations of the Fed. And again, I think it's reasonable to assume that the cap could be lifted by year end.
The cap could be lifted by year end.